So President Trump has COVID. Is that going to bring us a stock market crash? I will show you what to watch for to keep your money safe. Plus, I will do my regular weekly market analysis. We'll talk about some upcoming events that we have coming at Stockscores.com. We will look at the day trade of the week on GDOT and a market scan in search of longer term trading opportunities, all coming right up. So the market had a pretty dramatic sell-off to start the day on Friday after learning that President Trump has COVID. It came back fairly well, but the questions remain, will this bring on more market weakness? Will it bring on a crash? Well, we can try to be smart all we want and try to do our own analysis, but at the end of the day, all that really matters is where money flows. And you and I and every other small investor, we really don't have enough information to make an intelligent decision based on information. And so what we must do instead is look at what the money is doing in the market. The largest investors get the best information. They can pull it out through their contacts and their knowledge and that sort of thing. And they will, with the billions of dollars that they move around, give us a trail to follow. So what I want to show you today is how to analyze the overall market index for signs that it is necessary to get defensive with your stock holdings. And what I like to do is look at the charts of the major market indexes. We're going to look at the NASDAQ 100, but we can also look at the S&P 500, the Dow, doesn't really matter. And simple rules where we look for breaks of upward trend lines from falling tops. And we've talked about this many times here on the Market Minutes, but let's show it again and show how the market reacted on Friday, but also what to watch for going forward. So jumping to the chart here of the NASDAQ 100, and you can see that we had this intraday upward trend. So this is a 30-day, 60-minute chart. And because the markets are so volatile right now, this is actually the one that I prefer to watch. Now the market gapped down on Friday, so it opened down here after being up here, and that was a fairly substantial move to the downside. It then bounced back, but sold off into the close. So we have a fairly negative signal going into the weekend. However, we have not broken down from a falling top on this chart. Now what do I mean by that? Well, notice that this high is higher than the previous one. So we have rising tops. Whereas over here we had falling tops. And then when the market broke down there, it moved lower. So at this point, we have what's called support right here at about 275, 274. And if we break down through this floor from a falling top, we'll have a signal that we're going to move down to the next floor price. All right, this is just basic chart analysis. So that's the short-term picture. Basically, on Friday, we got a bit of a negative signal, but we have not yet broken down from the falling top. That could happen as soon as Monday morning. Watch for that Monday morning. Now, looking at the longer term chart of the NASDAQ, is we can see that we've had this upward trend line here, and it's been broken. That was from a new high. Let's take that same theme. Here is our falling top. If we start to break down through this floor from this falling top, that will mean that the sellers are gathering momentum. They are stronger than the buyers. So what I want to watch for in the longer term time frame is a breakdown on the daily chart of the NASDAQ 100 below 260, assuming that we've got that falling top that has formed. And if so, if that happens, then I think you want to get very defensive, either getting aggressive with exits on your long positions or looking for positions in inverse ETFs, which will go up if the overall market goes down. All right, let's get into this week's market analysis. But first, I want to remind you that we have some free upcoming webinars on Stockscores.com. I do these a couple of times a year. It's a great way to learn a little bit more about my approach to the market, both as a short-term trader, but also as a longer-term investor. We've got a number of events, and if you go to Stockscores.com, Trader Training, and then the upcoming events page, you will see the list here, which you can see on Saturday. I'm going to have a little presentation about an hour long on how to pick winning stocks. And then the following Tuesday, how to invest in the stock market profitably. And then finally on Wednesday, October 21st, how to day trade the stock market profitably. So if those things interest you, these are free events. Just go to the Stockscores website. Again, click on the trader training menu down to upcoming events and you can register there. All right, let's get into this week's analysis of the US markets. And here is a chart of the S&P 500, and it looks a lot like the chart of the NASDAQ 100, which we just looked at. We've got that little upward trend line that was broken. We've been building now this falling top. And if we break down through this floor, then we should get more worried about where the market is going to go. Now notice that this chart, unlike the NASDAQ 100 chart, did not close the day at its lows. So money was flowing out of the tech names, Apple, Microsoft, Nvidia, Amazon. They tended to underperform the overall market on Friday. And one of the reasons is there was some announcement of some stimulus that is going to help the airlines, for example. And so that helped the S&P 500, which is a broader market index, to hold near its highs of the day, whereas the NASDAQ 100, those tech stocks, seem to have a little bit more weakness. So we do have a little bit of a different story on the different markets right now. But again, if we break down through that floor, which is about 331, 332 on the SPY, then get defensive. Looking at the longer term chart, you can see that we had that great bounce back. We hit new highs. This is called a bursting bubble candle. We hit a new high, closed below the open. That was a negative. We've pulled back since then for about a month. We now have to watch. Are we going to make a falling top here and then break down through this floor? If so, I am concerned that we will see more dramatic selling pressure. Hasn't happened yet, but something to watch for. And again, I always try to give you something to watch for so that you know how to take care of your money during the week between these videos. All right, next chart is the Russell 2000. Russell 2000 actually held up quite well on Friday, and so it would seem that money is coming back into those small cap stocks, which have really lagged, and perhaps coming out of the large cap tech names where we saw some great gains. So I think maybe there's a little bit of a rotation away from some of those high flying tech names and into some of the smaller cap stocks. You might want to watch for opportunity in the small cap US stocks. Moving along to the Canadian markets, and here is the chart of the TSX 60. Pretty similar to what the S&P looks, a little more choppy perhaps, but we do have some falling tops building. That's pessimism. We came back well from morning weakness, so that's a good sign. But again, if we start to roll down through that support at 2420 on the T.XIU, then look for the next level there to be the floor. Looking at the longer term chart, again, this is always that thing we want to watch for. We've got the falling top that's formed. And now if we break down through this floor, that would tell me more weakness is coming. It hasn't happened yet, but watch for it. If we break down through that floor, more weakness is likely ahead. Looking at the TSX Venture, which is the microcap stocks in Canada, a lot of mining names, and you can see a little bit of weakness the last 2 weeks as money has been coming out of some of the gold sector and the mining sector. And I think that will continue as long as gold is a bit weak. We'll look at the gold chart in just a minute. All right, let's do that now. Here is the gold chart, and you can see an upward trend line right like this. Not drawn perfectly, but you get the idea. We ran away from the trend line. Simple rule in chart analysis is when price runs away from the trend line, it usually pulls back to it. We're working on that now. So the longer term upward trend is still in place. We've been pulling back for almost 2 months, and the gold sector hasn't been a lot of fun through that period. But we may soon bounce because we are getting close to that upward trend line. Watch for a bounce off of it. Until that happens, I would remain fairly cautious with the gold stocks. But the long-term picture is still not negative. So I still think that there could be longer-term strength in gold. It's just we're on a little bit of a 2-month pullback here, and it may have a few more weeks left. Looking at the oil market, we broke down a few weeks ago, and we're getting a little more selling pressure in oil. And I think that oil looks more likely to go lower than higher right now, and our floor is way down here. So I think you should be generally pretty cautious with the energy sector, as we should have been for many months, because the energy sector has been in a downward trend for some time, and therefore stay away from the energy sector in general. And onto the fear chart, we had a little blip higher in fear on Friday. You can see that, just a slight little move up. Still, though, not a lot of fear. And if we are going to get a correction, we're going to need to see this chart break this downward trend line. So if we start to move up through $30 on the VXX, that's a sign that some fear is coming back to the market. Could be telegraphing more of a crash. Again, some things to watch for to protect your money if we do get more of a market sell-off. So my ratings then, neutral on both time frames for the US and Canadian markets, neutral long-term for gold, but bearish short-term, and oil, bearish on both time frames. We've got a choppy and trendless market, and that shows that both the buyers and the sellers are not really yet able to act with conviction. And so we should expect lots of volatility up, down, but we're not going to be trending anytime soon until we get conviction from either the buyers or the sellers. What's happening is investors are digesting the new information very quickly. The market reacts very quickly. And that means that the market is not really helping us in general. So we need to have a pretty cautious outlook with the overall market. Picking stocks requires a very high standard, as the overall market is not really helping us. Gold is stable, oil is weak, and fear is moderate. All right, let's get into the day trade of the week. And this week we are looking at GDOT, which is a textbook example of what I look for when I am day trading. And you can see here that we had this action candle right there. This pattern is called an ascending triangle pattern. And we also had confirmation on the 13-minute interval, which is actually one of the things that I look for. I don't often discuss it here, but that'll be one of those things that I go into a little bit more detail in some of those free upcoming webinars. So make sure you go to Stockscores and register for those. I'm going to teach you a little bit more about my approach to the market. So on GDOT, for every $100 of risk, we would need a position size of 290 shares. That meant about $15,300 in capital. But of course, you can margin that 3-to-1. So for about $5,300 in capital, in this particular case, this trade worked really well late in the day on Friday. It returned almost 19 times its risk. And so for every $100 of risk, there was $1,880 of profit. Given the capital required of $5,300, that was a 35% return on a hold of just a few hours. And this was a great mover and really a textbook example of the kind of trades that I look for with Stockscores. All right, now what we're going to do is jump over to the market scan on Stockscores. And this will be one of the tools that I show in the investing webinar that's coming up in a couple of weeks. And here we have the tool. I'm going to run the Abnormal Breaks US market scan. Click on that. And we then go through the charts one by one, looking for good chart patterns. So we're going to go through until I see a good one, and I'm going through these fairly quickly, looking for the right kind of chart pattern. Really what we want to see is abnormal activity breaking from low volatility. All right, here's one right here. So we'll blow this up. This is ACRS, and it has what I would consider to be a positive chart pattern. Notice the rising bottoms. That is a sign of optimism. We have a line of resistance right about here at about $2.70. And notice also that volatility is compressing. So if I was to draw some little wiggly lines there, you can see that the amount of price volatility on the left is higher than the amount of price volatility on the right. And then we get this breakout on Friday with stronger than normal volume. That tells us that the buyers found a reason to get aggressive buying this stock on Friday. Some new information justified that push through that resistance line. So that's what we call a break from an ascending triangle pattern. The tool finds it for us. I always like to take a look at the longer term time frame as well. So I'm going to take a look at the 3-year weekly chart. Again, let's blow this up. And I can see that this is a stock that's had, a terrible downward trend and has spent over a year going sideways and slowly building a base and now starting to break from that base. So I like this. I would rate this trade a 7 out of 10. It has good stock scores. You can see we're signal stock score of 98, sentiment stock score of 80, and a great chart pattern. And so to me, that is something worth considering. All right, well, that has been the Stockscores Market Minutes for, October 5th, 2020. Remember, sign up for those free events on Stockscores. Like the video if you enjoyed it. Leave a comment if you like. But most importantly, trade well.